The rand hit one-week highs against the dollar yesterday. Optimism about the Eurozone's debt crisis really prompting investors to buy into risky assets more than anything else. And that seems to be the focus, whether you're looking at the currency markets or the equity space right now.
Morning, Alishia. Yes, absolutely. The rand yesterday just riding a wave of seems global optimism. There had been reports on Wednesday that there's a resolution had been reached as far as the EU leaders meeting that occurred yesterday. And yesterday we had confirmation of that. The details that emanated from that meeting, it seems that market participants were particularly happy with the plans that have been put in place. And for now, it seems that the risk of the contagion from the fallout from the Greek debt crisis has been largely contained and for now won't spread to peripheral countries. So at the moment, there definitely seems like a risk back on scenario. We saw the rand strengthen, and if we have some sort of resolution or positive outcome from the negotiations that are currently ongoing in the US over raising that debt ceiling, then we'd expect to see further improvement in global sentiment and further strengthening in the rand.
What's your take on what is playing out in the US and the progress they're making? Because for now, we've got the dollar under broad-based pressure.
It certainly is, Alishia, and that's because there hasn't been a definitive statement yet. But it does seem that the reports that come out of the US do indicate that it seems that the opposing parties are moving closer together. Everyone is aware that August 2nd is the deadline for raising this debt ceiling, and of course there's a lot that needs to happen before August 2nd in order to pass legislation to allow the ceiling to be raised. So the news that parties are moving closer together should help the dollar, but of course relative to the euro at the moment, it is still under pressure because the situation in Europe, it looks a lot rosier than the one in the US currently.
Of course, overall, while sentiment is being given a boost via global factors at play, we've got sentiment towards South Africa still being tarnished, and that most particularly via strike action right now. We've seen in the news that today we've got NUM at diamond producer De Beers going on strike after failed wage talks there. The kind of impact you're seeing this starting to have as the strike season is more prolonged?
Well, Alishia, for the time being, of course, with events unfolding in the US and EU, rand's direction has already been taking its cue from these developments. But of course, as these issues are resolved and slide to the back burner, then domestic events become more prominent, and the strikes are certainly a case in point. And although participants have been partly diverted by developments abroad, we think that the rand could have possibly strengthened further in the absence of the negative implications of this ongoing strike activity. As you've mentioned, strike activity does seem to be spreading to other sectors, even as strikes in other sectors appear to reach some conclusion. And of course, the longer they go on or the more widespread strike activity becomes, the greater the implications for GDP growth this year. So certainly a key risk factor for the rand.
This in a context where we had the central bank governor yesterday reiterating that local recovery has been hesitant and strong growth out of the first quarter is unlikely to be sustained through the second quarter. Any takeaway points from that address yesterday out of the MPC that was particularly relevant for you, Nomvuyo?
Well, Alishia, on the whole, the statement was pretty much in line with what we'd expected. There has been a modest deterioration in the inflation profile, but we knew that that was coming. And also the downside risk to growth, both domestically and globally, appeared to be mounting. And the governor did seem to stress those points. So for the meantime, we're fairly confident to stick with our view that there won't be a change in interest rates this year. We'd be looking for the first interest rate hike to take place in the first quarter of next year. But of course, the downside risk to growth, and particularly in light of the deterioration in the external environment, were particularly pertinent features.